there are different views on equities maybe, but I think there's one universal view, which is that inflation is coming back, right? And it's actually reaccelerating. Recent headline data shows that, by the way, not just in the U.S., but also as we're seeing with Japan, the idea that the Fed would cut rates or that the BOJ would cut rates when inflation looks like it's accelerating here is lunacy. And anything that Trump does from a policy perspective is likely going to only reaccelerate inflation. So I think there's a set of circumstances here that are going to be challenged. Now, I'm not talking from the standpoint of somebody who's a bear or a perma bear or anything along those lines, but the reality is the euphoria is palpable. I mean, you can feel it, you can see it. You look at trading volume and AUM growth that's gone into leverage funds. You look into some of these very speculative types of funds that are out there. They have attracted tremendous retail flow, and everyone seems to think the markets will do nothing but pathwise go up. They may be right, but if everybody's betting that way, I don't know if you want to bet that way yourself.
No, indeed, Michael. And, just that point, if the universal view is inflation coming back, then that would eat into earnings as well.
Yeah.
And,
exactly right.
Thereby make people more bearish on the markets rather than bullish.
Yeah, no, I think it's right. And I mean, the surprise would be the Fed has to not cut rates, has to actually raise rates. That we're not done with the rate hike cycle. It is bizarre to me that the Fed is insisting on a rate cutting cycle with credit spreads at all-time lows. The bond market says there's no default risk. Why in the world are they lowering rates? Unless there's something else that's happening, which nobody really knows. Right.
Very good point.
With what we saw in the inflation print overnight and the fact that it did tick up, I mean, what's the next piece of information that's critical as far as the decision making is here for the Fed and the next meeting? Is it over to the jobs data?
Maybe, although I think the next most important critical data piece for the Fed is something that has nothing to do with the U.S. I think it's what happens in currencies, and in particular with the yen. I have made the argument before that I think the reverse carry trade dynamic is not over. We saw a glimpse of it August 3rd and August 5th. We have seen the yen now reverse and go back to those types of levels when there was a bit of a panic that went on with the BOJ, and we saw that volatility, which scared everybody for a moment in time. I don't think that's over by a long shot. I think the most important central bank here is not the Fed. I think it is the Bank of Japan. I think if the Bank of Japan does hike rates in December, which candidly they probably should, it could still cause shockwaves. Everyone assumes that this dynamic is over. Japan has been a source of leverage for the world for over a decade through the carry trade. It does not logically get resolved by 2 days in August that caused the VIX spike to 65. I think anything that the Fed does here is going to be more based on what happens internationally, not based on what happens in the U.S.